Post-market report. News and insights. The BSE Sensex marched ahead by 226.85 points to 76,759.81, while the Nifty 50 added 86.40 points to close at 23,249.50. But this wasn't the euphoric surge of a bull run, more of a tired soldier gaining ground after a tough battle. The markets were buzzing today as Nifty CPSE surged 2.12%, leading the charge, followed closely by PSE at 1.90% and Realty at 1.78%. Energy and Pharma also showed strength, climbing 1.28% and 1.21%, respectively. Meanwhile, financials saw a steady rise with Nifty Finance up 0.39% and Bank Nifty gaining 0.30%. But not all sectors had a smooth ride. Auto slipped 0.40%, while IT took a hit, tumbling 1.14%. And at the bottom of the pack, Nifty Media struggled, ending the day down 1.21%. Financial stocks led the charge. HDFC Bank rose nearly 1%, and Bajaj Finance jumped 2.3% after strong profit growth. But Tata Motors tumbled 7%, reeling from a 22% profit drop, while Whirlpool of India nosedived 20% as its parent slashed its stake. The elephants in the room were the foreign portfolio investors, FPIs, who had dumped 81,600 crore rupees worth of Indian stocks in January alone, the second largest monthly outflow ever recorded. The usual January FPI inflows never came, muttered an old broker at the exchange. Uncertainty around the US administration, interest rates, and even trade policies have them sitting on the sidelines. Meanwhile, across Mumbai, SEBI had sharpened its gaze. A new set of guidelines had just rolled out, aimed at reining in the finfluencer frenzy, no more rogue stock tips on social media without accountability. Traders murmured about stricter oversight on algo trading, enhanced surveillance on suspicious trades, and a clampdown on pump and dump schemes. With Budget 2025 just around the corner on February 1st, the market's next move hinged on one thing: policy direction. Will the budget introduce incentives for FIIs? If yes, we could see a reversal of outflows. If not, well, brace for more turbulence. Meanwhile, India Inc. was divided. Some sectors soared, while others slumped. Bharat Electronics surged 4.4%, buoyed by a 47.3% YoY jump. Adani Enterprises crumbled 5%, reporting a near-total profit wipeout. IT stocks slipped as uncertainty clouded the sector, with Nifty IT down 1.14%. The global markets are showing mixed signals today. The dollar index is holding firm at 108.09, ticking up 0.09%, while gold continues its steady climb, now at $2,777.54, gaining 0.63% as investors seek safety. Crude oil, on the other hand, remains under pressure, slipping 0.12% to $72.50 per barrel. Meanwhile, the Indian rupee is hovering at 86 rupees and 62 paise against the US dollar, edging up 0.06% in today's session. Now, let's talk about the tug-of-war between foreign and domestic investors. The foreign institutional investors, FIIs, have pulled out a massive 4,582.95 crore rupees from Indian equities, continuing their selling streak. But stepping in to balance the scales, domestic institutional investors, DIIs, have infused 2,165.89 crore rupees, cushioning the impact. Will this be enough to hold the markets steady ahead of the budget? We'll have to wait and watch. As the sun set on another trading day, investors braced for the next chapter. Would the budget light the bullish torch, or would the bears claw their way back? Only time, and the finance minister, would tell.